Paramshakti Steels. Welcome to you, sir.
Thank you.
The session is going to be moderated by CA Ashish Vyas. Welcome, Ashish ji. CA Ashish Vyas is a qualified chartered accountant, an insolvency professional, and an IBBI registered valuer with more than 17 years of experience in assurance, project finance, consultancy to stress assets, and cash flow management of cash deficit entities. With this, sir, I would request you to please start with the proceedings by first introducing the speaker, CA Rajendra Bhutta ji. Over to you, Ashish ji.
Good afternoon, everybody. I welcome all of you in this case study of Paramshakti Steel Resolution under IBC. I will introduce you to the speaker who has worked on this project as a resolution professional. As we all know, the IBC is time-bound process, and with limited information, there are a lot of challenges with the resolution professional faces. Sometimes employees are also not available, and we look for the information from our other colleague who are the auditors. So we will fortunate that we have with us the speaker who has resolved this process. I'm producing brief introduction of our today's speaker, Mr. CA Rajendra Ji Bhutta. He is a fellow member of our institute, ICAI, with more than 42 years of experience. He has processed following academic qualifications. He is a Bachelor of Law, Bachelor of Commerce from Mumbai University, certified course on arbitration and conciliation conducted by our institute, ICAI, certified course on an insurance broker. He is also an insolvency professional. He has handled more than 25 cases as interim resolution professional, of which outstanding dues ranging from 200 crore to 2000 crore. He is registered with IBBI, the Insolvency and Bankruptcy Board of India. He has handled liquidation cases of 5 companies. His core competencies includes independent, unbiased attitude, strategical planning and control, corporate finance, merger and acquisition, and so on. There are many competitive competencies Mr. Bhutta possesses. He has participated in arbitration proceedings as an expert on behalf of claimants and respondent. He is panel arbitrator with National Stock Exchange and BSE. He has designed and implemented the strategy that fulfill the objective, maximize revenue, profit, and market share of companies while streamlining overall operations pertaining to business development. He has successfully conducted a detailed review of business, financial analysis, capital structuring, documentation, estate debt, assets revival strategy, and project-based corporate finance structuring. He has held various senior positions such as Senior Vice President, Managing Director, Board members in different companies. Also, he has contributed through authoring, he is a co-author in Handbook on Resolution Plan under IBC, which is published by our institute, ICAI. With this brief introduction, I hand over to today's speaker, CA Rajendra K. Bhutta ji, to take his presentation forward. Thank you, sir. Over to you.
Thank you. Good afternoon, friends. This is a great opportunity for me to present a case study on Paramshakti Steel Limited. Before I start with the presentation of case study, I would like to put it on the record that the forum which we have assembled today, the objective is to do a study, to have shared the experience of the people who have already undergone the different resolution plans, who has already gone into the different aspects of the CIRP, and that experience will help the other members to act in a positive manner in such difficult situations. So this particular study is not with respect to what happened in that particular company. We are not interested in any allegation or any marking on anybody. We are not working as an adjudicating authority, neither we are a regulatory authority. We are analyzing a particular case in a scenario, that in such scenario, how to react, so that when the situation comes, we will be able to manage, or we know when to and how to take the help of different professionals in the study. This being a case study will restrict our information and whatever we have shared in this particular presentation as a confidential with the institute for the purpose of study and not for any other public domain information. With this reservation, I start and then give you the presentation that how the whole company came to insolvency and how the process of CIRP was conducted and how the resolution plan has been effectively undergone. I'll just put on the presentation so that at least we have the slides which we can look into it and then we can. Is the screen share is disabled? Rita ji?
Yes, sir. Yes, sir. It is enabled, sir.
No, it's disabled here in my piece. Can you check at your end?
No, sir. It is enabled.
Is it seen? No.
No.
Because when I click on to the screen share, it's showing that screen share disabled for this meeting. Yeah, I'll just screen share. Yeah, I got it. Can everybody see the presentation?
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Yes.
You may go to the first slide, sir. Yeah.
Yeah.
Clear, sir.
So this is the case study on the Paramshakti Steel Limited. I just give you the brief background how it started and what is the company, so that at least when we are discussing the pros and cons of the every aspect of the insolvency, we'll know what is the background of the company. The company is a state company in the steel sector, and the business of the company was to do the trading in the steel products. And the company had one of the unit factory in Taloja with more than 10,000 square feet of the open area, having the machineries for the purpose of cutting and sheeting and steel plating and all that type of things, which normally is considered as a trading activity and not as a manufacturing activity. The company has capital of 9 crore and had gone into the banks for the financials, for the financial the financial support for conducting the trading activity. If we'll go a little later that how much the bank has financed for them, but the structure of the financing was the total trading activity for the purpose of trading steel, which was under the current CC limit and the bill discounting limit, which is commonly known for the trading activity. So company had taken the trading activity fundings from the 4 banks and then started the trading activity. Company failed to pay the bill discounting, LC bill discounting amount, and therefore it has gone into the NPA and it has become the NPA company. The Union Bank of India has taken the company into the insolvency, and on 12th of April 2018, the company was declared as admitted to the insolvency proceedings. The financial creditor Union Bank has filed the application under the Section 7, and it was successfully that 12th of April the application was filed, and somewhere in 7th or 8th of July the order was passed. So on 12th April, something wrong with the date has come wrong. The IRP, I was appointed an IRP under the order. I was required to take charge of the company, and accordingly we have started the process of a CRP. Company, if you look into the amount of the debt the company had, it should be quite a large company, but the company's office was in Masjid Bandar, which is in a local trading area of the steel market, and the plant was in Taloja, which is in further to the New Bombay, where the more than 10,000 square feet was allotted only for the purpose of stocking the steel. The cooperative was availing banking facility of a term loan only for the purpose of the machineries which were installed in Taloja, so that they can do the cutting and sheeting of the product. CC limit from State Bank of India, Bank of India, Union Bank of India, and ICICI Bank, non-fund based LC bill discounting facility from the bank. So these are the 4 banks who were involved: State Bank of India, Bank of India, Union Bank of India, and ICICI Bank. ICICI Bank from non-performing asset, and therefore they have handed over the or assigned the debt to the prudent PRC. The account of CD was declared NPA with the Union Bank of India and other banks. The first step of the starting of the insolvency proceedings, IRP, is to take control and charge of the assets of the company, or visit the office and then see that the control is taken. The director is informed, all the concerned directors are informed, and then you take the charge of the company. The first step itself was very difficult. That when we visited the registered office of the corporate data at Masjid Bandar, we realized that there is no office belonging to the corporate data. Someone else is sitting in the office. Office is totally occupied with the other people. There is no one of the corporate data. And on the inquiry, it was found that the address has been there, the company, but the premises don't belong to the corporate data, and therefore nothing is available in that particular office from the corporate data, of the record of the corporate data, and not a single director or a staff of the company is sitting or occupying those premises. The next course of action was that at least to find out who are the directors and where their directors, where the staff is sitting, how they're sitting, where they are, what are the contact addresses. No one could provide these information, and we had to go back to the Union Bank of India and say that, okay, so we don't have the even basic information of the contact addresses of the telephone numbers of the directors. Finally, we got the number from the bank, the record, who are the directors and what are their telephone number, and accordingly we contacted them to have some information from them. But no director has come forward to give any support. So very first step we found that, oh, this is something where we are going to face a difficult time. At this stage, I would like to pause for a second and give that normally when the companies are in insolvency, there are 2 types of the company. When are the companies where there is a genuine loss and the company has come to the insolvency to safeguard the assets from the further losses, so that the new owner who comes in had a reasonable good asset from where he can restructure the finances and he can give a new birth to the company and he can come back to the life. Whereas some companies where the owner promoters are intended that they should not repay the money, use the money as much as possible, and if it is not possible, then just swipe off. But available. There is no winding up available, therefore he will come to the insolvency and then the insolvency process. So this company was belonging to the second category of the company where it is not that there are losses incurred due to some reasons of the losses, but the intent was clear that nothing is available. So we were very worried and then figured how the process will start when we don't have the name and address of the factory and the office. Fortunately, we made all our efforts to run around to all the places, ROC record, bank's records, and other details. Went back to the registered office of the company and got the details where the factory now. So we started and moved to the factory and said that, oh, let us take the charge of the factory so we'll know who are the people in the factory and how the factory is running. On our visit, we find that the factory is totally under the rainwater, submerged in the rainwater. The roofs are broken, plants are open, Only one security guard sitting at the outside the gate, nobody inside the gate, no staff member there. The premises were deserted premises. We went inside further and to see that if there is an office rooms and then office, we'll be able to get something from there. Once we entered the office premises, we got that all the office records are burnt. Somebody has spoiled, and all the records are spread over the floor of the premises, and nothing is available. And on the top of it, the record is burned in fire. There was a water logging in those premises, and everything is. We asked the security guard. He said that there was fire in the few days back, and therefore this is what is remained, and the people have put the water so that everything is submerged in the water. The records are not there. Meanwhile, one of the employees came and then he said, okay, he is going to support and he will be able to show the premises and everything and a detailed look at the premises to find out what happened and how. Fortunately, the premises were boundaried, gate was there, and the plant and machinery, the heavy plant and machinery were there. So that the sheeting, cutting, all this. But we realized that the operations are not conducted for more than a year. So the plant and machinery is lying idle as it is. On the floor of the premises, there is no assets other than the machinery. There is no stock available. There is no steel sheets or things are available, which we can say it is an inventory of the nature, which we might have to calculate at the later stage to find out what is the value of the inventory. We have taken the stock of the situation, we understood everything, we have taken photographs, we have taken the details of the machineries, made the list of the machineries and all that thing, whatever could be done was done and came out with the little bit information of rather than what we did not have earlier. So this is a situation where you come across and from the day one you find that you are fighting against a wall. No one wants to come out with the detail. No one wants to come out with what is the detail. I said, nobody wants to give what is the land, what is the planting business, how the business has gone. All that thing was totally hidden and totally non-cooperation from the existing management. And there was no staff. There is no accountant, no company secretary, no finance person. So you can understand that and how the IBC person, one single person, he has to take a charge of the thing and then run and see that we are in a CRP and we process it. But at this time, we gathered our strength and said that no, in whatever the situation, whatever it happens, we'll be able to put it across as it is, what is, and then try to see that we should be able to complete the CRP. Either we may be able to get into the liquidation or in a resolution plan, but we'll give a conclusions to this particular data. Now, further information that that what was things available, only draft provisional audited account to the 31st March 2017, and later on up to July 2017 was made available. So nothing was available beyond that. Audited accounts were available of 2016. Creditors worth rupees 144 crore in 31st March 2017, but the inventory of 41 crore was converted into a debt, so the debt became 180 crore as on the 3rd of July 2017. Physical value, only fixed assets were available, no inventories are available. Other assets of loans in advance, no details are available. No directory is available for any information. Later on, we came across one gentleman who said that he is a director and his name was there as the director. But we realized that he is also not a stakeholders director, but an employee director who was appointed as a director for the purpose of fronting to the banks and to any regulatory authority or the IBC person, so that he can say that I am a director, but as far as his stakes and as far as his authority was, as good as an employee. No director for any information. We have brought all these facts to the COC meeting. We had first COC meeting, second COC meeting, and then we have brought it to the members that this is the position where we are not getting anything, and we might have to file with the application in the section 92 to get the information. Directors. Too difficult a situation. But at this point of time, one gentleman who was an employee has been presenting as himself as a director, and in the ROC record he was a director, so his words to be taken granted, and he has promised that he will support and will provide the information. So the bank says that instead of going to NCLT, in any NCLT also we are not going to get the result fast. Why don't we try and pursue the director to get the information? That's okay, fine. If you get information, it's fine. So this was the position of the financials, and we were fighting against the non-cooperation, non-documentation, nothing, nowhere to go. We said, let us take one clue that when we have all the bank statement, we'll be able to generate a lot of information from the bank. So we have numerous pages of the bank statements from all the 4 banks. We have started analyzing the detailed analysis of the bank statements, but at this point of time, our intent was not to go for anything beyond just to understand what are the assets and the liabilities of the company, and so what are the other information available apart from the trading activity which is reflecting in the bank statement. The review of the bank statement has realized, we realized that this is LC bill discounting. Normally, what the people do in the market, they do LC bill discounting, and the funds are generated. And on the due date, the funds are again paid, so that the cycle keeps on rotating, and the funds remains with the company, and the cycle keeps on going. The funds are available with the corporate, and the banks are also happy because on a due date every quarterly, the interest is coming and the funds are supported, or funds are secured with the collaterals and the assets available under the belt. But under this particular case, when we realize that all this thing is happening, we also realize that the funds got blocked and the house of cards collapsed. Wages and creditors were admitted to insolvency. So all this business cycle which was going on due to the change in the market scenario, the demand of the steel was less, market was not conducive to the supporting the trading activity. The funds got blocked in the sundry debtors, and those companies were also admitted to insolvency. This company also had to go to insolvency, and as the house of cards collapsed, this company collapsed. They have nothing else in the kitty. So review of the bank statement immediately tells us what is the fate of the company, how the company was operating. These are the things basically which we have to spend a lot of time, a lot of energy to generate the basics, how the things are happening, so that when we have to take a call, how to resolve or how to take it further, we have the strength and we have the depend upon. You will tell me that why we are going on to this all. The reason is that once we go through the basic fundamentals, then we know and we will appreciate that what has gone behind and how the resolution plan is going to be structured and how the resolution plan is going to be successful. If you don't do these exercises, if you don't have the basic information of the data, assets, business model, business assets in terms of the information and a data and a creditor, we know the business is not having any strength or is having a strength to get the good value out of it. I'll just summarize you the balance sheet as of 33rd July 2017, which was for the purpose of putting into the information memorandum, and we have collected the information, and on the basis of collected information under the tally system, which is, if you tell me that if you are having such a huge company that they don't have any software to account for, they are just totally depending on the accounting on the tally. So they had some information on the basis of tally on the group basis, and we have came to some numbers which were as it is, that 9 crore 9.53 was the capital, reserves 43 crores. If you see the reserve, then you will go to the past history of the company, that you will know that the reserve was also created only for the subscribing to the share capital, and to what extent it was is difficult to analyze at this stage. Trade receivable, bank liabilities 141 crore. Now these 141 crore is only to the extent what was accounted in the books. But if you go to the claims submitted by the banks, it will be substantially high. The reason being the bank has accounted interest and these books are not accounted interest. Fixed assets, sundry debtors is 180 crores and the fixed assets are 14.63 crores. 180 crores is the largest asset. And bill discounting is the model of the business. So you have generated a huge sum of approximately 170-80 crores from the banks, funded the debtors, and over a period of time, as soon as the cycle stops, your loan becomes bad loan. This is the way it happens. So bill discounting, it seems that everybody can go to bank and then put some numbers and projections. You'll be able to generate the bill discounting facility. But bill discounting facility, as it is easier, it is so hard that as soon as it collapses the whole company. The company got collapsed. Now we're coming to what are the loans or what are the outstanding of the financial creditors and what are the stake of the financial creditors. The financial creditor stake was substantially large. You had 174 crore outstanding of the banks. 174 crore is not a small amount. And that also the banks. Whereas against 174, you have the asset of only the current assets of the debtors and inventory. Whereas the fixed assets, as per the books, is only 15 crore. So you can imagine that how much is the funding was not secured, or the collateral was insufficient to protect the interests of the bank. So now we are at the stage where we don't have to analyze why the bank gave and how much bank gave and what was the good and what was the bad. But this analysis helps us in some other way to know exactly what has happened. Union Bank of India, 24%, 42 crores. State Bank of India, 14 crore. Bank of India, 44 crore. And Prudent ARC, ICICI asset of 18 crore. The total 174 crore, and these are the four financial creditors holding 24 crore, 24%, 14%, 44%, and 18%. There's 174 crore was the liability which was to be discharged, plus the liability of the operational creditors, statutory dues and other dues. The assets are only 14.5 crore in terms of land and building and plant and machinery, and 180 crore is the sundry debtors. I'll summarily run this exercise of the security. The reason being that I just want to have there was a first charge on the mobile and first charge on the immobile asset. So I'm just putting it on the record, but I'll just explain you that in three banks, the Prudent ARC of ICICI Bank, State Bank of India, and Bank of India, they had pari passu charge against the fixed assets and the current assets. Whereas State Bank of India had first charge on plant and machinery to the extent funded by the State Bank of India, that was around 8.75 crore. First charge, remaining plant and machinery, second charge by the other three lenders. Whereas in case of Union Bank of India has joined, but at that time there was a multiple banking system. In the multiple banking system, the securities are individual securities and not a consortium agreement. So under the multiple banking system, the Union Bank of India was not having any release of the pari passu charge in favor of the Union Bank of India. The Union Bank of India had second charge on the current assets and the first pari passu charge on the fixed assets. So Union Bank of India, I'll just read this out, which will be beneficial to you. During the course of the COC meeting, it has come out that land and building are under the charge of SBI, and ICICI Prudent. The fixed assets, land and building are under multiple banking arrangements. Union Bank of India and State Bank of India was not agreeing to consortium lending. Therefore, the first charge on the pari passu base of land and building continued with the Bank of India, State Bank of India, and Prudent ARC. Plant and machinery exclusive with the exclusive charge of the State Bank of India up to rupees 8.75 crore. Union Bank had a second charge on fixed assets. Current assets were on pari passu basis with all the lenders. Now, this is there were the current assets are 180 crore as it is shown in the slide earlier. Fixed assets is 14.5 crore. So when we analyze this, it looks good. But when we go a little later, then we'll come to know how the things have changed substantially, and how the banks are having different security, and their interest has come down considerably. I'm not running through the provisions of the IBC and the in respect of the other subject where all the compliances were carried out by the corporator or the RP. These are normal compliances which the RP has to undertake, carry out, have the COC meeting, call the COC meeting, explain everything, put on the record, everything which was done in a normal course of business, and then everything was available. I'm not putting all those details here for the purpose of the saving the time and that saving and coming to the core what we want to discuss as of today. So information memorandum, the vital document was corporate data business valuation process for the prospective resolution applicant for the PT valuation. All this was done, so that I'm not putting more time on this. The next exercise is the most crucial exercise of the valuation of a corporate. Valuation, the two eminent values were appointed for the purpose of valuation of the fixed asset, land and building. Current assets, the situation was very different, and no one was willing to, because there was no record to come out to what the valuation has to be there. So as per the regulation 35, at that point of time, it was only the fixed assets which could be valued in 2017, 16 and 17. Two valuers were appointed, and the two valuers have given their report. So the draft report for the valuation fixed assets were presented to the COC. And first time when we presented the valuation report to the COC, the valuation given by both the companies was having a variance, and the variance was substantial. Therefore, the bankers had a long discussion with both the parties independently and jointly to come out there why the differences are there, and so differences should not be there. So there were some assumptions which needs to be refined, and the basis of valuation should be corrected. So then the draft report was written back, and the valuers were told to give the valuation report and a correct assumptions basis. During this meeting, the bankers have shared their valuation report, which they had received at the time of sanctioning the loan. At the time of the sanctioning of the loan, the valuation was more or less double than what the valuers have given. And it was discussed. The valuers explained that the difference between the valuation report, what was present at that point of time, and what presented this time, because the whole assumptions are different, scenario is different, and we can't take those high rate valuation in the present scenario. It has to be on the fair market value and liquidation value, and therefore both the valuers have given their valuation, revised valuation. As per the revised valuation, plant and machinery, land and building, plant and machinery was 32 crores by the Rakesh Narola and Company, and 35.80 crores by the Shanti Karamshi and Company. The total valuation, average valuation was 34.11 crores. Still so far, so good. Everything is fine. We are having valuation. We have got a valuation report. COC meetings are held. Some records are available. Memorandum information is prepared. Now we are equipped to, as per the law, to go for the inviting the resolution plan. But before we go to the invitation of resolution, it is better that we must understand what is the analysis of the current asset. Okay. On the physical verification, no stock was available, therefore the inventory is valuable. But there is no stock because whatever the stock on the 31st of March 2017, when they prepared the balance sheet for the 3rd July 2017, all the inventories were sold, and the inventories were converted into the debtors. Thereby, the debtors has gone from 140 crores to 180 crores. Regarding sundry debtors amounting to 180 crores, no details are made available. Clear cut, no details are available. Directors promised in all the COC meetings to provide details of sundry debtors. At last, he provided a list of the sundry debtors with the amount outstanding, and no details of breakup or ledger was provided. So this is the scenario in which we are working. How to value this? This was a very difficult question for any RT to to come to answer. RP had made all efforts to reach out to all the sundry debtors. First, by mail, on very poor response, RP deputed a team of to visit each and every debtor to work out the amount raised from these. Now you can imagine that now, what is the marathon job which are undertaken? We have created a teams to go in the field, go to the office of debtor, find out who is the debtor, find out his books of account, what is the amount receivable from him, and what is the amount which we can receive it, and then exercise has to be conducted by team to go to each and every debtor. So they were huge. There were 140 days, but 140 days. The total debtors were concentrated not more than 25. So we say, okay, we'll do exercise of 25. Every debtor who is having more than 10 lakhs will touch base and find it out. What is the amount realizable from these debtors? This was a marathon exercise carried out. Now, RP talked to realize that many parties are not in existence. There are parties with whom CDA had never transacted any transaction. Some parties are only having provided addresses on such as some else is operating. Debtors having crores of rupees outstanding having the address of a small office. RP places report to COC that no amount is raised. Now this is the scenario where many LC discounting facility exercises that you give somebody else's name and address and the bills are made on that account and on due date the party pays, so that till the cycle is on, nobody wants to know where is the goods, who transported the goods, where the goods have gone, where the party exists. Nobody looks into that. But only when the things are bad, we want to know who is the debtor, then we come to know there is no data because these only addresses are used only for the purpose of getting the funds to the kitty. So this is the scenario. Now, we had this difficult time and we have presented this to the COC meeting. Other assets are small, 14-15 crores, the information is not available and no document is available. Valuation of current assets considered at nil by the RP. Now it is very, very difficult for any RP to say that the current assets of more than 180 crore, 90 crores are zero. No one will believe it. Not even a layman will believe that valuation of the current assets is considered at nil. RP has put up in the COC meeting that that we appoint a forensic auditor to investigate to the affairs of the company. COC had refused to appoint a forensic auditor with the gap that forensic auditor will cost due to increasing the CRP cost. So we don't want to appoint a forensic auditor and it will delay the process of the CRP. So the request of the RP to appoint a forensic auditor was refused and COC has said that okay, you can record it in the minutes. He recorded that the COC has refused to appoint a forensic auditor. Whereas Union Bank had appointed its own forensic auditor. That report was not made available to RP or COC. And Union Bank of India informed this during the course of the hearing for the resolution plan that on the basis of forensic audit report, the Union Bank of India had reported the account as a fraud account. So Union Bank of India has appointed its own forensic auditor and who has reported directly to the bank, because if the Union Bank of India is appointed, he will report to the Union Bank. And if you go through the details of his report, but I have gone through the report and understood that most of the places he has concluded only on the basis that there are no records available and no support available, so he could not comment anything. But wherever he could get, he just surmises that this is a fraud and therefore it can be. But the banking lost the money and accounted as a fraud account. Now the valuation is carried out both of current assets, fixed assets. You know what is the phase of the company, how much is possible. So why not to call for the expression of interest and see that who was interested in the particular company. On the face of it, we are finding that we may not be able to get it in a resolution plan, but we were knowing people and we had some exposure to the steel market and we had floated the inquiries into the steel market, those who understand the business and who understand the company. And this company, the people are knowing about this company, and therefore they had some interest in the providing the acquiring the company. As per the law, we had provided the advertisement of the EOI. We have received resolution plan from a good company and the steel market, trading company, having a background of the trading, huge turnover of more than 1,000 crore. And they had shown the interest and they have submitted a full-fledged resolution plan with all the details into the all the corporate data and everything. The resolution plan was tabled for the COC. COC has put it for the consideration that the RP analyze the resolution plan and we should look into it. The RP has analyzed the resolution plan. He has started verification of the credentials of the resolution plan and came out with the answer that resolution applicant is having account NPA in one of his account in his some sister company, which as a precaution we said no, we will not be able to give our hand over this company to a company which is having a history of NPA in the bank, and therefore the resolution plan submitted by the ex party was outrightly rejected. COC had called for another round of EOI. Now in the second round, what happens? Prudent ARC has expressed a desire to submit resolution plan. Prudent ARC is one of the COC members. He is aware of what is the steel plant. He is aware because Prudent ARC is having other steel companies also under their belt. So they were having the people who can be interested in this and they wanted to acquire this company. They expressed it, but at that point of time, the ARC were not allowed to participate as a resolution applicant into the process. Therefore, prudently, the wisdom provided that the prudent should not be a resolution applicant in the process, and therefore, the proposal of the prudent was not considered. So the prudent is ouch. Existing management thought that now the things are not working out, the resolution plan is not there, so why not to try again and ask for the further money of 15 crore to give a resolution, which was only in terms of a letter. POC had point blank rejected the application, refused to even allow to participate. We received one more application that was from one more company in the steel sector and having a good turnover, good background, good record in the market. When we checked up the record of this company and then put up to the COC, COC said, why don't we consider this application? He had been given a letter to provide a resolution plan. The prudent, the applicant, Gopani Steel Limited, was having completed in compliance with the provision of INB code and presented a resolution plan. RP verified the place of POC consideration. Resolution plan was negotiated in COC. Now here the crux comes in. Now the plan is prepared, plan is placed before the COC. COC, all the four members are having a different stake in their secured assets and the current fixed assets and current assets. So they were negotiating in the COC meeting as well as they are negotiating individually with the party to come out so that it can have a better pricing and so they can conclude it. So all the four banks were having their individual negotiation with the RA. At the same time, they were having a meeting in COC meeting also. They were negotiating. So it took a substantial time, and then finally the negotiation completed individual banks, and they came out with that to pass the resolution plan in the COC meeting. At that point of time, COC meeting, the Union Bank negotiation was not complete, and Union Bank had not yet approved the individual pricing to be accepted in the resolution. Therefore, they say, no, we want more time for the consideration. Whereas only 3 days are left to complete 270 days. Well, for the RP to be any further time. We discussed the same thing in the POC meeting that the letter of the Union Bank of India that the time should be provided or not to be provided. all the COC members decided that we provided, and the Union Bank should vote in that particular meeting itself. Under compulsion, Union Bank of India voted against the resolution plan. In that point of time, the resolution plan was not considered by the Union Bank of India individually negotiation as well as on the COC meeting, and therefore the COC they refused to consider and they have voted against. In the process, the resolution plan got approval of 75%, which I will bring it down in the little later stage, but it was approved by 75% majority, and the RP had issued compliance report in format. There was a resolution plan at the COC level within 270 days was approved. COC had certified the resolution plan. They also given certificate. COC had given certificate the resolution plan is a viable plan. Now, what is the plan? What is the amount? What the RA is providing? This particular slide is of a very good interest, that all the 4 banks, what are they outstanding, how much is the haircut they got it, and how much is the amount they are going to get it. Now, State Bank of India, haircut is only 67%, 67, 68%. So he got 8.25 crore. Bank of India, amount is large, haircut is more than State Bank of India, 76%. Union Bank of India, 73%. This had come to a little later because earlier it was only 5 crore. The haircut was higher. And Prudent ARC of 65%. So because they have independently negotiated, therefore they could negotiate. The State Bank of India negotiated very heavily, so they got only 67%. Bank of India realized that the State Bank is getting 67%, so they also wanted to get it to 67%. But it was too late. And they said, okay, they have agreed in the individual as a management. So they came into COC and they agreed to the COC plan. Union Bank of India was provided only 5 crore. But while during the course of the hearings in NCLT, the RA had agreed to increase the amount of 5 crore to 10 crore. Now, why this difference in the percentage? Only because there is a security interest in each bank has changed depending upon what is the available asset. Therefore, they had, now in State Bank of India, they had a straight one charge on the fixed asset first charge. Fixed assets first charge. So they were good enough that 8.25, they are going to get it next. So they said that we want 8.25. Therefore, they wanted to get an 8.25. And Union Bank was not having, because they had not agreed to the consortium agreement and they realized it later when they came to COC meeting that they are not having the charge, therefore they were getting only 5 crore under the individual negotiation, which then they have got it in the NCLT hearing and they got it increased. So this is the final figure after the NCLT hearing. Operational creditors, 1 creditor, 1 crore, provided 0. Sales tax, provided 1 lakh. Working capital for the restructuring and refurbishing of the plant and machinery, 12 crore. So there was 60 crore, plan for 60 crore, and plan for 60 crore, whereas 47, 48 crore was payment to the financial creditors and 12 crores for the purpose of refurbishing of the plant and machinery. Resolution plan was discussed in COC and at the individual bank level. Resolution plan was approved by COC 76%. Union Bank of India rejected the resolution. The amount of payoff was only 5 crore. The Union Bank of India objected to the resolution plan on the ground sufficient time was not provided for its consultation of the management. Request for the time was rejected by the RP. Resolution. See now, RP role is so different that he has to fight with the corporate data. He has to fight with the suspended directors, erstwhile management. He has to fight with the COC. He has to fight with the valuers to get the proper valuation. And after doing all that, when he comes for the resolution plan, he's going to be called upon in the NCLT, in the judiciary, in the regulatory bodies. All the questioning and answering has to be done by the resolution professional. So the life of the resolution professional, he gets stretched from all over. So he has to be very vigilant. He has to be very careful that it's not happening that he is complying in work and the compliance of the one, the other thing is getting left. If I would have given him the time to Union Bank of India, it was not possible. There are only 3 days are left. We can't wait. I have to prepare the resolution plan, submission application and file it. So I had to take a stand. Though I am not going to give you anything. If you want to pass the resolution, you pass the resolution today itself, yes or no, and you are out. If you don't take these type of stringent stand, it becomes very difficult for the RP to function. Union Bank of India objected to the resolution plan was further improved during NCLT hearing. RA agreed to increase the amount of Union Bank of India from 5 crores to 10 crores. This I just explained that how the security has created the differences. Now here, the resolution plan is approved against the assets of around 30-35 crore. RA is willing to go up to 42 crore, 47 crore, has increased, which is substantially large. You may not be able to get anything out of the sundry debtors. You may not get anything out of the other assets. But it was in a strategic planning that he wanted to have those land and building and machinery being in the same business better than a strategic investment. So therefore he agreed to that. Now, you have the resolution plan approved more than 66%, and in the application is made for the approval of the resolution plan, then what happens? It is not that your battle is over in the POC, your battle continues till the resolution plan is totally approved. All the positions of the banks or the financial creditors, financial credit or otherwise any application, then you have to face with it and then to reply for that. RP had filed a reply. Adjudicating authorities questioned RP about nil valuation of current assets inventory. This I just explained earlier that this was a problem. And RP had to take a stand that the valuation is nil and nothing can be done about it. RP had filed a reply in the form of an affidavit attaching all the efforts undertaken by the RP by visiting the offices and addresses provided with the directors, establishing that the name addresses are dummy names. Many addresses are not in existence. Adjudicated authority, after going through the affidavit, report and photos, appraised the extensive work carried out by RP and recorded the same in the order. Sometimes when you find that NCLT is taking very stringent approach to the RP, but sometimes when RP has done a good work, they also applaud also. So this is the date I got up to that, this is the way you should wind out and go to each one and see that the thing has been carried out to find out exactly where and how much is the realizable. The adjudicating authority, Honorable Bench members, CPE, Prakash Kumar and Ravi Kumar Dorsey, Mumbai Bench had issued a direction in the respect of concern raised regarding the sundry debtor amendment to 180 crore. It is a social crime. See, the words are used by the bench. It is a social crime wherein money has just evaporated, and by means of a resolution plan, transactions need to be addressed properly, and hence RP was directed to call the meeting of COC and its legal representative to discuss and come out with some suggestion to be placed before the honorable member on or before 21st August for the consideration of it. This is the exercise being given to the RP. He was told to call upon a special COC meeting. So the COC meeting, special COC meeting is called. COC meeting was called by RP. He was informed that he had carried out an exercise to find out the details of all the data in place before the NCLT members informed by affidavit of the exercise, and findings to place on record of details of the data. RP has read out the relevant pages from the affidavit to appraise the members of the details placed before the Honorable NCLT members. Out of the total outstanding debts from 146 parties, 180 crores, major chunk was pending from 9 debtors of value of 170 crores. So you have nine parties paying 170 crores. During the meeting, the explanatory statement made by the director was contradictory to the facts and findings submitted by the RP. Now, even at this stage, the directors are trying to give their own explanation that this is not the right, which was against the affidavit filed by the RP. Director also placed on table the letter of confirmation. Now see the fun, how the directors are acting. They are putting a COC meeting, special COC meeting, they're placing on the table that we have the confirmation. From the director, from the debtors, under the signature of the directors, the letter of confirmation without supporting of ledger account, without the proof of dispatch, and the confirmation was not on letterhead of the counterparty, and it was simply COC explicit. And then they say that we already got the confirmation from the party. If you got the confirmation from the party, it should be a process of a confirmation to be followed. If you don't follow the process of confirmation, you go and let somebody else's sign on that. It doesn't amount to that, it is an act. Because we had gone to those parties, we gone into scene and met people there across the table and got the photographs and what they are saying and what we are saying. We had everything recorded and placed in as a record. And to contradict such argument that we have the confirmation and all that, the COC had gone through this. He had a long 1 hour discussion only on the letter of confirmations and how the process started. The forensic auditor of Union Bank of India has recorded that the bills were not having transport receipts, and the inward outward was based on the basis of the rather than a lorry receipt, was based on the cart receipts, like that, which is absolutely you can understand what it would amount to. On inquiry about the proof of dispatch of the letter of confirmation, the flag that these letters are hand delivered. Now, if you can't have the answer, then you say, okay, it is hand delivered, so that nobody can have the proof that how it was delivered or not delivered. COC member discussed the subject matter among them. Each member has submitted their own viewpoint on the subject. Now, this is what the banks have considered, that in that special COC meeting, Bank of India stated that on the basis of facts brought to the notice, COC, this would go further investigation by forensic audit of transaction, and certainly in view of the fact that existing promoters should not be absorbed. Now, this is the Bank of India is stating in the special COC meeting. Union Bank of India already declared the account as a fraud-based account. The Union Bank said we don't have to do anything, we already accounted as a fraud. State Bank of India, in view of the RP affidavit discussion held by of recoverability as genuine as the data, the question whether the direction to be questionable, therefore the direction of this to be sorted from the NCLT. Statement say, okay, now this is the fact, we'll put it across the table and to the NCLT and ask for the guidance how to deal with the subject. After submission of RP, the special report COC meeting on realization of sundry debtors, adjudicating are directed that the sundry debtors be signed to one of the financial creditors to realize the amount. The amount so realized will be distributed amongst all the financial creditors in the ratio of their claim, and this is forming part of the audit. So the answer came out that the amount will, whatever the amount is realized on the basis of these sundry debtors over a period of 5 years, will be accumulated by the one particular financial creditor, and then he will distribute among the other financial creditors in the ratio of their claims. So this is the way. This one big issue which was hanging fire was resolved in terms of how to deal with the valuation of the current assets and the current assets which are evaporated in the process. One of the final thing which I just want to, one of the special thing what I would like to bring it out here, that during the how the structure of the transaction was done, so that it becomes a very viable transaction, and then people should be able to appraise that how to do. In the process, we have gone through this. There is a debt of 174 crores. Debt settled for 52 crores. So debt to the extent of 50 crores is considered as a sustainable debt, and remaining debt of 120 crore is considered as non-sustainable and transferred to reserves. SBI, UBI, and BOI will be paid on upfront basis, cash basis, by funding from prudent ARC. So whatever the amount which we have shown in that particular chart, that amount payable to the Bank of India, Union Bank of India, and State Bank of India will be paid upfront within 90 days by prudent ARC. For this, all three banks will assign their debt to the prudent. The prudent got the debt assigned to the assignment, and he paid against that with an upfront cash payment. The sustainable debt of rupees 92 crore shall be paid by resolution applicant as structured payment over a period of 8 years to the prudent. Now the corporate debtor will make a payment of 52 crores to the prudent as per the time schedule agreed of 8 years at the interest of 8%. The sustainable debt shall be converted into equity shares. Now, non-sustainable debt will be converted into equity shares. The capital of the corporate at a face value of ₹10 share, which shall be held by the prudent. So 13.25 crore shares of 10, that is 132 crores, would become the capital. The issued, subscribed, and paid up capital of the corporate debtor shall stand reduced because you have 132 crores to 9 crore already existing. So the total capital becomes 142 crores. The 142 crores capital will be doing by the reduction in the capital to 1/10. So the 10 rupee share becomes 10 paisa share. So 100 times it is reduced. So 142 crores become 1.42 crore, 1.42 crore capital. 1.42 crore rupee capital with 14 crore of equity shares. The resultant reduced share capital 1.2 shall be consolidated into fully paid up equity shares of ₹10 each. So the number of shares gets reduced. Under the structured payment, amount due to Bank of India, Union Bank of India shall be paid by prudent ARC on cash basis against assignment. Amount due to prudent ARC is payable over a period of 8 years with interest at 8% per annum, with 1 year moratorium by resolution applicant. The resolution applicant had infused additional funds to control 90% of the enlargement. Amount paid to the prudent under the structuring of the loan will be debt in the books of the. So this is the way the whole transaction was structured. The debt was converted into sustainable or non-sustainable debt. Sustainable debt was converted into the debt by the payment, with the scheduled payment, and the unsustainable debt was converted to reserve, and reserve got into the equity. Equity was substantially reduced and consolidated, and therefore the whole structure becomes viable, whereby the capital has also not gone up, and the reserve has been used, reserve has been reduced, debt has been reduced. So, thing was structured in such a way that it will not have an impact of the income tax. So this was all planning for the purpose of saving the structured transactions from the income tax on capitalization of the reserves or transfer of the debt into the reserve, because the liability is discharged without payment. Till now, we had seen that how all the resolution plan was prepared, resolution plan was approved, resolution plan was dealt with by NCLT. Major issues were resolved, debtors issue was resolved, valuation issue was resolved, and the financial creditors who has filed an application for increasing the amount was also considered of Union Bank of India. The amount of Union Bank of India is also from 5 crores to 10 crores. This is the stage where now the resolution plan is approved, resolution plan order, NCLT has already passed the order, and now once the order is passed, now what are the things remaining which the RP has to do? On receipt of the NCLT order and approval of resolution plan, the CD was handed over to the resolution applicant. Now the handover has to take place. unless you complete the handover, you are not discharged from the liabilities of the resolution. You have to do a handover as per the resolution plan approved by the NCLT. Ensure that all the payment costs from the CRP costs, as mentioned in the resolution plan, has been paid. Under the resolution plan, we had already stated how the supervision will take place. Accordingly, the monitoring committee was to be appointed. Monitoring committee got appointed. First meeting of the monitoring committee has to be held, wherein the RP will be present and he will be handing over and saying that all the compliance is required under the NCLT order and under the resolution plan has been complied with. And now it will be the henceforth the monitoring committee, and the monitoring committee will be the responsible for complying with the provisions of the resolution plan or as NCLT order and as per the resolution plan. If any variations, the monitoring committee should go back to the NCLT and get it rectified. RP handed over all the records, documents of the CD. Whatever the records that we had, all the records are handed over. Corporate debtors, designated company secretary or finance controller, the handover has to take place. RP and RA had joint visit to the factory for the handover of the assets as per the fixed assets list in the report. Valuation report had provided full list of the plant and machinery which was valued. So RP will explain that this is the list which was, and the report which was the list of the plant and machinery was there has been put into memorandum information. Now that as per the memorandum information in the list, all the plant and machinery are handed over. The amount was paid to the financial creditor as per the resolution plan. The resolution plan was provided that should be paid within 90 days, but the resolution applicant has made the payment, and therefore this was recorded. The amount is paid to the financial creditor as per the resolution plan. Report of handover was filed with the NCLT. So the final that we have to file the report with the NCLT that all the compliances as per the order and as per the resolution plan have been completed. Henceforth, after the handover of the resolution, of the corporate data, it will be the exercise of corporate data is monitoring committee to comply with the provisions. So this is the resolution plan in a nutshell, which we had gone through the exercise. We had seen that how the good company, bad company, or worst company behave, how they act, how it is difficult, how and what way it can be, the assets of the country should be protected. It is not the words used by the implicating authorities on a social crime that so much money got evaporated. But if it is a loss, then anybody can understand. It's in a business and somebody is losing the business money, which cannot be 100%, which cannot be 200% of the what you borrowed, but it can be some percentage where your rotation stops, you are not in a position to pay the money. But if such company comes into the picture, the solvency or the decision has to be exercised, then more vigilant or more provisions required or more safeguarded are required to be built, so that the people are aware that it is not so easy to go away as without any provision towards the exchequers who has already lost their money so much in terms of bank. In view of that, what I thought that I'll put across my experience, which may be of help to all of us, and if all of us you support that these are the things which you feel that are required to be considered, and then we may request the regulators to look at this and then apply their mind, which may be of help to the future resolution plans. I still have 5 minutes more. I'll just put these 2-3 things and then I'll complete my session of this. So what my proposal is, or what I think my suggestions are, it should be the duty of responsibility of the suspended directors and board of directors to provide an audited financial statement up to the date of order of admission into insolvency. The audited accounts will provide assets handed over to IRP. Today you don't know what you are getting. You say that there is one building and there is no agreement for that. There is some building, there is some plant and machinery. You say you don't own that. There is some plant and machinery that is given to somebody else, but we don't have in our stock. So I don't know where is that. We don't have the records of the inventories which what is in. So under all these circumstances, it is not possible for the RP to come on day one and say, okay, I'm the controller and then I know everything. No, it is not possible. Somebody has to hand over the assets to the IRP. So these are the assets which I'm handing it over to you. And now you have to carry out the process of the CIRP. But if you don't have the asset, you don't know, you don't have information, you don't have a record, nothing is available, then it becomes very, very difficult for any person to conduct any exercise of controlling and safeguarding the assets of the country. The directors, personnel, secretary, auditor, managers, the same salary during CRP period under the control and supervision of to provide assets, documents, and records of the CD to RP control and management of the affairs of the CD. Now, what I am perceiving is the company should run as it is, because I have seen that as soon as the RP or RP comes in, all the persons are out. Nobody there on the scene and nobody is available. But the person is there, his services should continue. If there is a person of a CFO, he should continue. If there is a person who is a manager, he should continue. If all the people go away, you say, okay, RP can come and appoint new. It is not possible that you appoint new who has no knowledge of the history of what has happened. So all the people who are there as an official, senior people should work under the control and supervision of RP, but should continue. And that should not be with the discretionary power of the COC. They should continue at the present salary, what they are getting, and that should be considered as a part of a CIRP cost. Third is, I'm putting some part of the responsibility on auditor also. That is with the wisdom of the institute, what they want to look at it and how they want to structure it, I don't know. But I've just made a suggestion very mildly that auditor may be responsible to provide all working papers, files, and audit trail, document, and notes for expressing his opinion. It is a courtesy that he should provide all this so that he is also, as a member of the society, should help out in the process of CIR. Suspended directors hand over all the documents and records of the investment, loans, advances, and other assets. Normally, what happens, assets which we physically see, we can get it, but assets which are in terms of the document, the documents are somewhere in somebody's cupboard, which we don't know. So then somebody has to come out and hand over all the documents with the records so that at least there is some value can be ascertained and can be safeguarded. RP can control and manage the asset only after he has got a possession of the asset and relevant documents from the person in charge and holding those assets. IBBI regulations to be provided for management of the affairs. This is one of the very big issues which I think most of the IPs are facing, that my 270 days are over. POC is complete. But my order of the NCLT for the resolution plan or for the liquidation is not out. Till that date, I will not be able to hand over to the liquidator or to the resolution applicant during this period how the company's affairs to be managed and how the financing to be done and how the whole process to be completed. So this is the thing which I think we should be able to look into it, and if some new suggestions comes out during the process of this meeting, we may be able to add that. This is my thanks to all of you. As your presence, therefore only I have been able to put it my views across to you. I take the opportunity, all members of my team, very big team, many people have supported me in executing all the aspects of CRP and successfully handing over the CD to the resolution plan. It was a marathon job, and I feel myself to be proud that I was able to complete it successfully. My special thanks to Rekha Shah, Senior Chartered Accountant, and eminent insolvency professional for supporting me in this assignment. I'm thankful to us. I thank IITI, ICICI committee members for providing me the opportunity to present my version of resolution plan case study. I thank all of you. Thank you very much. With these words, in a very summary form, I completed it. So it is a very big exercise which has taken me at least minimum 2 years. Each day was a marathon day, and asking everyone there how to proceed and how to go ahead. But a lot of lawyers have helped me out. A lot of IPs have helped me out. Due to this, I was told that to make a presentation that how difficult it is, that it is not always easy for an RP or IRP to function. This is very difficult, where it is difficult to find out how to function. Under such scenarios, we should take help of other RP. We should take help of the team, and we should be able to come out with the answer so that it is not that the assets get lost because of some scrupulous people. Very much, everybody. Now, I will request Ashish to see in case if some questions are for me, or most of the questions that have been answered, then I will be able to answer anything which is. Over to Ashish.
Yes, sir. There are a few questions we have from participants.
Yeah.
And question number 1 is very interesting. It's a optimistic question wherein we are getting many haircuts, but the question is related to whether. So the question says, are the financial creditors banks entitled for interest during the CIRP period under IBC provisions?
No, they are not entitled for any interest. The interest closes as on the day of admission to insolvency.
Yeah, so the question is, the answer is no, they are not entitled.
Not entitled. The amount is frozen at that time. It will be interest will get accumulated when you go for the liquidation. So when you make an application, when you make a claim under liquidation, the interest for the interim period from the day of insolvency to the date of liquidation can be added as an accrual.
Second question comes, what are the remedies available? The question is not very clear, but it says that what are the remedies available for the release of collateral securities?
The release of?
So there are collateral securities. The securities has been given. What are the remedies available? How can they get released from the collateral securities?
From when? During CRP?
During CRP.
During CRP, no collateral security will be released.
Yeah.
No security will be released.
Bhutta sir, you may stop sharing the screen, sir, so that your picture now comes on the big screen.
Yeah.
Okay, sir.
Yes. The third question is, one of the big challenge in the CRP is managing affair of the company. The challenge is even more if the company is a bigger company. How do you think a resolution professional can work out way or methods in managing such affairs of the company? This question is more to share on your experience. Like, how do we manage a bigger company?
Sir. I'll give the answer then in case of the company which is an operational company and company which is a non-operational company. In case if it is an operational company, we know what is the operation going on and we can have the estimate of the number of people required for the conducting those operations. My experience is that as far as possible, I will try to take the people which are already there on the job and they are continuing so that we have the advantage of the experience of the people who are conducting those processes and they can continue. In case if the people are not available, maybe some senior people we may have to appoint, like a CFO, who can control all people, or administrative person or HR person, depending upon the requirement of the organization. I'll appoint a senior person only for the seeing that the things are happening in the way it should happen and not as the way the suspended directors were conducting it. So that you control the affairs of the company through, as far as possible, with the existing number of people rather than appointing each and everyone from the outside. Because that will increase the cost, time will be get lost, we may not have the money approved by the banks. Because if the person is existing, his existing salary is paid, so that you continue with the CIRP cost for the paying his salary. And in case when the companies are where there is non-operational company, In case of a non-operational company, you can make judgment of how much is the requirement for the minimum requirement so that we can conduct the operations of the non-operational company as the control of the. Now, many locations, how many locations, how many people, how big is the location, how many people will require. So it will be more of an logistic and the seeing with the experience that how to manage those.
Okay. Again, the second question is the related questions. It says, how do you maintain going concern of the entity? How do you ensure that the going concern is maintained of the corporate debtor?
The maintenance of the going concern, first is the going concern definition itself, we have to understand how much is the going concern. If there are 4 departments, only 1 department is functioning as the going concern, then only 1 department will run. The whole 3 departments should close down, should run as an non-operational company. If it is an operational company, we have to ensure that the operational company is self-sufficient and not incurring the additional losses. If it is additional losses and incur, then you have to stop the bleeding of the company because you don't have money to pay those expenses. Because from where your money will come for the paying the indirect expenses or direct expenses of the loss-making units. Then you have to ensure that there is no loss-making unit. There are only 4 units which are functioning, which are operational, which are having managed surplus. Otherwise, your CRP cost will go so much high that you will have to run to the bank and how to financial creditors to fund that. And from where you are going to fund, because the company is already lost, you are not going to get any funding for that. It's a pure judgment of the company that you should run only those profitable companies so that you can sustain the expenses of that. Otherwise, you will not be able to run it.
Based on balance between what is cost-effective manner. The next question is, what are the important criteria for resolution plan evaluation? So what are the criteria we take care when we do a resolution plan, evaluation of resolution plan?
These questions are depending upon each and every different case. How before we EOI is called for, the subjective get discussed in that how much is how to evaluate the resolution plan in terms of a quality, in terms of a share capital, in terms of a total surplus with the company, or in terms of turnover. So we have a combination of the factors of capital, the turnover, the quality of the company, track record of the company, profitability of the company. So all these factors put together will be able to evaluate, and you have that criteria you decided well in advance, and you give a number and markings. On the basis marking, you say if the marking are X, then only it will be considered. Marking less than X, it will not be considered. So accordingly, you have to give valuation there.
Question number 6 is how to deal with non-cooperation from the erstwhile management, the support from suspected management. So how do we deal with non-cooperation from previous management of the company?
It's a very big challenge which we have faced. If we not cooperating, we have to find out what are the other means and ways in which we should be able to get the records of that. There are a few things. Let us say, suppose if we are not getting the details of the assets, we can have the appoint a person similar to what a valuer who can go and make the assessment of the assets. So he will be able to make an assessment, but that becomes a very costly exercise. What is the year of the make? What is the make? What is the production capacity and all that thing to come out with these answers and then say these are my assets. Similarly, you have to find out what the production capacity. You have to find out what the turnover in previous years. So you may have to go to the record of the GST. You may have to go to the record of the income tax activity. You may have to go to the record of the bank. So what are the other sources of indirect record which we can available may be collected, and then from there the compilation take place. In our case, we were knowing that these are all bank transactions, so we have put all the banks and got the bank transactions in the last 3 years. And it was a huge marathon job to have the study of number of pages of bank statement. It was a marathon job. So you have to depend upon then, what sector or what part of information you are missing and how to get that part of the information so that at least you can come out with the answer. If you go to the NCLT, there is a provision in the 19.2, you can go to the NCLT and ask that the promoters and the suspended directors are not supporting. But experience is that it takes time. And you may get what order you don't know. Because you may get that order that, he is supporting, so what is the problem? Then You are left with nothing. Or he may say, okay, I'm going to give within 10 days time. And he comes out, okay, order say we will give in 10 days. But when it comes out, he don't give you. So these are the practical problems. You have the legal recourse available, but how much the legal recourse will be practically possible to get it is anybody's judgment.
With the background that we know that in your resolution, the court has appraised you. If the matter is put properly against in front of members, so I think there are chances that you may get a favorable directions and instructions.
Yeah.
But it's a very one process, so it's difficult also.
You have to logically think that what the judiciary will look at it. If you have to see that it is a judiciously that you want to decide that it's a bad, you have to prove that it is bad. You have to go to the place, you have to take a photograph, you take the person, you have to take the account, you have to analyze with the account, you sit with the account. All this, we already recorded the conversation between two of us. And somewhere we have taken a photograph of the building where, suppose you have advances of more than 3-4 crore and you have done a transaction of 30-40 crores during the year, and it is the office of not more than 150 square feet where the two only peons are sitting, you can realize that what is the faith of company. So most of the things are practical. That's why this whole session only practical, that you have to work out practically that how possible that you should be able to make your own judgment and then come out with the answer and then take call from there.
The next question is technical questions. And this is about the provisional list which we issued after invitation of expression of interest. We receive invitation from them, and then we after 10 days of cutoff date we issue provisional list.
Yeah.
It says whether the objections can be raised against the provisional list of eligible prospective resolution applicant issued by the resolution professionals. So whether any objections can be taken on the provisional list. Now he has not mentioned whether by the suspended management or by the creditors or by anybody else. The question is open questions. Can objection be made against
RP has to work viciously, look at the application and see that all the provisions are complied with. Whatever we have given the criteria are complied with, and if the criteria is complied and he is available for this thing and he qualifies as per the judiciously, we should give him as a prospective applicant. Reason being, if you don't work as a judiciously and someone put in a finger and say that you're not worked judiciously, and he goes back to the NCLT and adjudicating authority that I have worked biasly, the whole process becomes to start again. Here is the role. Every minute the role of the RP is changing. Sometimes he's a negotiator, sometimes he is answering the financials, sometimes he is answering the legal matters, sometimes he becomes a judicious person to judiciously look at the subject.
Now the one is this question is on the professional advice. It asks whether it's worth, basically, whether entering into IRP practice is worth. I request you to give your suggestions.
No, I think probably what are you saying?
This is it whether entering into IRP practice is worthwhile. I request you to give your suggestions. So basically, a fellow member is asking for suggestions whether it's worth to enter into this profession.
See, any profession you work, you do it professionally, you are going to get your money. So it may be sometimes difficult time in terms of that you might have to spend more time, or you might have spent less time, or the processes are not as you thought about it. Maybe possible. But if suppose some problems are there, I think we are going to come out with the regulation in next amendment. And in last 4 years. In last 4 years, we have seen whenever there is a problem, the IBBI regulatory body has come out with this answer. So this profession by itself is not a problem. It may be in a process that there are some problems which should get strengthened or should get rectified in a process of the judiciary and the process of the regulatory body.
The answer is worthwhile. Yes, it's worth to enter into. With the few dedication, and if you don't want to get the money, you will earn the experience which may help you in earning money in the future.
It's more even how do you perceive it. My perceivance may be different from your perceivance, I have entered into it and then I thought it is a good practice. Someone will say, no, I'm not convinced because I have to get the different from different people because every time the call is different. You are a finance person, you are a production person, you are a banker, you are a security guard, and you are you are playing all the roles within that 1 year, like that. So if you feel that all this is not suiting to your nature, you may not do this because profession of a traditional practice may be different than this practice. Like where we are working with one law and you know what is to answer. Here it is, you don't know which law will be applicable tomorrow morning. You may be an IP Act will be coming or an IT Act will be coming and you don't know which act will be applied to your corporate debtor and he is in the firm.
You're a CEO as well as your security guard. You're under shoes of multiple designations, multiple responsibilities.
Correct.
The question is resolution applicant required to give a bank guarantee, earnest money deposit for submission of resolution plan? Yes. This is more for basically for the seriousness whether the resolution applicant is required to submit
yes
any amount of guarantee.
Yeah.
So the answer is basically based on depending on the whatever is the decided in the expression of interest.
COC decide that it may be 10 lakh, it may be 1 crore, depending upon the size of the company and the size of the resolution plan. Normally COC is deciding how much will be the bank guarantee. There are two stages. One is while filing the resolution plan, and second is at the time of NCLT approval of the resolution plan by the COC.
There's few more questions have come. How to save a company from going into liquidation? I think this is a repetitive question, but earlier was from a perspective of going concern. Now it asks that how do we save from it's going into liquidation?
What is the meaning of saving from the liquidation? If there is no resolution plan, how you will save it? There has to be a resolution plan. Somebody should be interested in that company. No? Somebody should be interested in the asset or somebody should be interested in the business. If nobody is interested in the company or nobody is interested in the business, it is not possible to save. So what is the meaning of saving? Your asset has to be liquidated and your money to be generated and to be paid off to the financial creditor. He has already lost his money. He is doing maximization of the value. It is not that you have to continue with the business. The value is the principle behind the IBC. If you get maximization value in RP, a resolution plan, or into the liquidation.
Now this question is accounting question. Whether the resolution applicant needs to pass any accounting entry in order of NCLT is received if order of NCLT is received in financial year 201X and payment is being done in financial year 201Y, being a binding commitment, kindly suggest. So basically it says that I have submitted my resolution plan in this year and I got the order in the next year. How do you suggest whether any accounting entry need to be passed by a resolution applicant in his books?
Who is passing the entry in whose books?
So it's about how does the investment is being treated by the resolution applicant. It says basically
resolution applicant has not done anything. He is approved by NCLT. Till it is approved by NCLT, he don't have to pass any entries in books.
The question was, since he provided commitment, I think so. Your answer is no. He need not move.
See, the investment will come only when the NCLT order is there. Without NCLT order, there is no asset in his books.
There is no commitment also.
No commitment. Commitment is there, but he don't have asset. He has committed to make the payment of the X amount. As per because he has already given that and he has already submitted his resolution plan and he has already submitted his bank guarantee for that. In case if he fails to abide by the resolution plan, his bank guarantee will be get invoked. So his bank guarantee is in any case is going to account for it. He is not going to account anything beyond a bank guarantee. And which is a contingent liability.
Based on prudence norms and the accrual systems, I think if there's any doubts, then reasonable provisions can be made. Otherwise, there's no need for to passing any entry in the books. Till the plan is approved by the Honorable NCLT. The next question is on your experience. How was time constraint managed by you during the CRP process?
It is you have to follow with the timetable. You just can't leave it. It has to be 270 days. You can't make 271 days. And at that point of there was no corona also, so you can't have an exemption also anywhere.
You have to manage the time basically.
Yeah.
You have to keep the track on time. You have to keep the table and
you dates are fixed. Your dates are fixed. You have no option.
So basically, whether information is available or not available, the based on the available information, we need to release the information memorandum,
Correct.
And then keep updating based on the information and similar activities on other things also. The next question is on the convertible debentures. Can unsecured non-convertible debentures? Can unsecured non-convertible debentures have a right to claim unpaid balance after the resolution settlement amount? If yes, when? If not, what is the other remedies? So basically, there's some amount has been provided to a debenture holder. His question is, can this be increased? And if yes, then how? And if no, then what are the other remedies available?
The amount will increase only in the resolution plan. If the resolution plan provides for it, if there is some scope for the increase, because he is unsecured. He will be classified as an unsecured creditor. He will be classified as an unsecured financial creditor. An unsecured financial creditor comes subsequent to the secured financial creditor. So if there is any amount available, and then he can say, okay, when this much amount is available, why you are not increasing money? But if there is no amount available, and the resolution applicant is providing some part of it, then he has no option to accept what is.
Basically, no option after the resolution plan is up.
Unless there is an amount available as per the provisions of Section 53, secured or already paid, and still there is an available balance which he provided, which is distributed among the unsecured. That time he can say, okay, when the amount is available, why is not provided? The amount should be available for the unsecured creditors.
Question is, while demand of creditors remains suspended during the resolution period, in order to run a smooth operation of the business, does RP have access to any line of credit?
He has he can have
interim finance.
He can interim finance. He can get the interim finance as approved by the board of directors, as approved by the COC. If the COC approving, then he can have the interim.
One question is related to basic. I think his client is following on this. While admitting claims, claim admit is based on what parameters? What are the parameters RP take when admitting the claim? This question become very important when we don't have access to books of accounts of the corporate debtor. How do we verify the claims?
When you don't have an access to the books of accounts, at least whatever the document he has submitted, we will have access to that. And we can see genuineness of that. If the document is genuine, if he is giving the purchase order, he is giving the invoices, he is giving supporting document of the transit. All the supporting documents are available from the basis we can examine that it is the claim looks to be genuine or not. Because verifying from the books is one of the criteria of accepting the claim. It is not the only criteria.
Then this question is an important question. I think this was part of your suggestion also. What is the position of RP till the order is passed by Honorable Adjudicating Authority, the NCLT, for handling for handover to RA or liquidators? So basically, time period between the
he continues to be he continues to be responsible as an RP. There is no change in his role.
Is an RP. But he can't take any decisions or he can't take any COC member. Can he call for COC meetings?
He cannot call for the COC meeting, but he will continue to be the managing the affairs of the corporate. That's why I put up my suggestions that you have to have some guidelines on how should it function, because he needs finance. He may need to appoint people. He may have to spend the money. He may have to have everything done. All these things which are as of today RP is doing. So without any authority or without any approval, and tomorrow something goes wrong, then how the RP is safeguarded?
Whether he's entitled for the fees during those periods?
Yes. His duty is as continuing. So you see that the orders are delayed as much as possible.
What are the remedies available to OC when they are getting a haircut of 100%? I think this is again a
he can take a certificate of the dividend 0% and put it to income tax for the claiming as a write-off.
This expense claim he will get.
It's write-off. He will get a write-off.
Yeah.
So to that extent, his income will get reduced. But if he has outstanding of say X amount and he gets no dividend and the certificate of the RP is given to him, what he will do, he will put it along with that this much amount has been write-off, bad debts. Then accordingly he will claim the write-off.
At least he can set off his income against this loss. Yeah.
To that extent, the income tax at least 30% इनका फायदा हो जाए.
30% का फायदा. The question is, can fair value or liquidation value be shared with members of committee of creditors or prospective resolution applicant? I think this is more of
a COC member after getting into no disclosure agreement and not with the resolution agreement.
Successful bidder will have full control over the facilities available without any claim from creditors and statutory claims. I think it's a conclusive statement. It says the successful bidder will have full control over the facilities available without any claim from creditors and statutory claims.
Successful bidder.
Yeah, bidder, yeah. RA.
Successful bidder means in what? Liquidation.
I think this question is more of a bidding the bidding process in the sense this is from the resolution perspective. So RA is successful.
RA till he gets an NCLT order, he has no rights on the assets of the corporate data. Corporate data are under the control and custody of the RP. Once the NCLT order comes in, thereafter only he can enter the premises or he can take any decision. Till that date, he has no rights.
Yeah. The next question is from a forensic audit perspective. For making a determination of a preferential transactions under Regulation 35A, the RBI regulations is referring, what factors are considered for the same? Also, what should a roadmap for practicing for young IPs from the graduate insolvency programs? I think there are two different questions. One is on the Regulation 35A regarding related to preferential transactions. And the second is, what is the guideline? How do we guide to the young?
What are you looking from 35A?
I think it's related to preferential transactions. So how do we identify the preferential transactions? The 2 year, 1 year, the period.
These are related party or non-related party. Na? They are related parties are only 2 years, and non-related parties are 1 year. So there is no confusion in that. I am not understanding.
So there is no confusion. It's just asking what is the how for making a determination. What are the factors to be considered?
What he is saying is within 75 days you have to have the determination of the transactions. So it is as good as that you have to carry out the whole exercise. Without that exercise you can't do the determination. Preference in other transaction. Because within 75 days you have to do the determination of the transaction under 43, 45, 15, 66. Na? Because he shall form an opinion whether the cooperator has been subjected to these transactions. I shall make determination or before 115th day of determination. Unless he has completed the exercise of determination, exercise of examining and completing conclusion, he will not be able to. So he has to complete that exercise another day.
Yes. Sometimes 75 days, even the RP has to determine whether he wants to, he has any doubt on the preferential transactions, fraudulent transactions, undervalued transactions, and other transactions. He will appoint a resolution forensic auditor. And the second part of this question is, what should a roadmap for practicing for young IPs from graduated insolvency programs? Guiding questions, like what should be the roadmap for them? How should they proceed?
for the insolvency professional.
However, graduated, this is a graduate insolvency program is there. This
As a young, he still have to have some experience of handling the accounts. If he don't have the experience, it's very difficult. So he must get associated with all the existing practicing insolvency professional. He should run with him few accounts, and therefore he will have experience of how all the practical aspects are looked into the transaction, and then only he can have it. Without having a practical experience, it becomes very difficult to give answers to as many questions as he will come across during the handling the account. So he should have experience of couple of accounts before he takes an independently.
Yeah. I'm just checking, sir, if you have more questions. I think we have taken many questions, and we are thankful. I'm just checking if we have more questions. I think the question load is over. We can see Ritaji also on the screen.
Yes, sir. We have exhausted the questions. So
You have grilled the person who was available. Put as many questions as possible, so tomorrow you don't know.
yeah, I request Ashish Vyasa to give a formal vote of thanks to Bhutaji.
This was a wonderful session. We get benefit from a lot of your experience. On behalf of this study session, whoever is on behalf of the participants, I convey my heartily thank for taking time and sharing with your experience. See, you started with the CRP wherein you don't have access to the books of accounts. When you visited there was nothing available. Somehow you search an ex-employee, ex-director, and you shared entire experience, which will help the young chartered accountant who are thinking to do practice insolvency professionals, young insolvency professionals who don't have much experience in taking entire resolution process to use it in their practices. You also mentioned that somehow you could get a resolution plan, but on examination there was 29A disqualification, and again you had to go to the exercise. You had to convince the COC members. How did you convince the COC member of a forensic audit? And if they not agreed, then ultimately there was an order from the Honorable NCLT wherein one financial creditor was assigned. There are all activities which has come, and then answering all the questions, the small question, the bigger questions. How should the young chartered accountant or young insolvency professional will pursue their taking guidance? And at the bottom also you provided suggestions which are actually pain areas which all the insolvency professionals are facing to making the corporate debtor responsible for sharing the information, not the only putting efforts on the resolution professional to put it. And also pain point within the members also you identified, though you are a member of the same institute, but you said that auditors need to cooperate with the resolution professionals, because we see this sometimes the auditors are not providing, not sharing information. There might be a reason that they have information or they might not be having the information. So that you also accepted that though it's our own member, but we need to make them also responsible that they need to cooperate with the resolution professional. At the end, you provided suggestions or rather requests from the regulator to provide the guidance for the period when the order is not passed. These are all comes with a lot of experience, sir, and we are very, very thankful on behalf of ICI Group and the participants and all of us. We convey hearty word of thanks to you, and thank you very much, sir. We look forward for more learning sessions from you. Thank you very much, sir. Thank you.
Thank you, Bhuta sir. I would again repeat what Ashish Vyasji said for taking us through that entire process of resolution of this corporate debtor in this case. You have taken us to the various and important aspects, sir, which a resolution professional takes care of during the CARP. As Ashish ji said, your sharing of experience would definitely help the members in understanding the practicalities of conducting the process. And thanks indeed to you, sir, for answering all the questions which Ashish sir put forth before you, which we received from the participants. And thanks Ashish ji also for moderating this session and by putting very relevant, important, as you said, small, big, all kinds of questions before Bhuta ji. Thanks to both of you, sir, for taking us through this session. Thanks indeed to you, sir, on behalf of the committee. Thank you, sir.
Thank you very much.